focusing on new short positions for the US markets and trading ASX listed gold companies for that shortlist. Gary Glover from Novus Capital is walking us through this week's report. Good morning, Gary. How are you?
Yeah, I'm excellent, Chris. How you going?
I'm well. I'm looking at this market roaring back up. We've been talking about short markets for some time, and you're looking at possibly adding new shorts. So when you're looking at adding, say, NASDAQ shorts, and the market's echoing that tech boom bubble crash of 2000, 2003, how does that compare to today when we've kind of got a ferocious rally on our hands? What's running through your mind in these parallels?
Yeah, I mean, I actually sort of had this chart, the NASDAQ, the 2002 bear market chart there last week there, but I've left it in my report there because I just think it's really important to understand the nature of bear market rallies, because they really, as we talk about, and sort of we joke about them a few times, but they really are short and sharp and quite powerful, and they're a lot more powerful than most people imagine. Or you can. It's funny. You can see them. You can look at them on the chart here and go back through historic periods and see these. Where they call bear market rallies or short covering rallies, but whatever you want to refer to them as. But they're quite amazing, quite short and sharp. So even though we can see in history we've had plenty of these, we've sort of got the same thing sort of happening here right now in our current market. So I'm starting to get a few more people turning more positive. So quite a few more. So just really the market really is its goal is to try and catch as many people out as possible here. So it's bearish phase. It's obviously will get a bit oversold, and then it will rally, trying to trap people in there. Or probably it'll go up a lot, sharper and more aggressive than people think. And then once they start moving, people will start to change their mode, their motion, and then get caught in at the wrong times here. So just you have to understand how bear markets play out. So just think it's really important to sort of study previous bearish phases of the past, and so really we've got the market sort of tipped over the trends. Really, what I call an overbalance is where you get the biggest correction, and then typically you sort of get these sharp sort of counter rallies here, or kind of lower highs sort of set up here. So the way I look at it here is we're looking for a re-entry on our SNAS and BBAS, looking for short positioning. I think this is only really the first leg down of a larger decline. So will they get back to the 50%? Will they push up to maybe towards the 61.8? Or might even go 2/3 of the range here, Chris. I mean, if you look at those in the past, there some of those have really snapped back well past the 50% of the range. But I think anything around that sort of 50 to 61.8, that's probably a good starting point here to sort of start to, in my opinion, to start looking at building a short posse. So I think the way to do it is maybe start small and then just sort of build into it as and then as we get confirmation there, then we can get a bit larger there. But there's nothing in this market here so far which is not contrary to how other bear market periods in the past have set up here. So it's just really interesting. It's sort of it's interesting seeing how it play out. Similar to how it plays out in the past. It's still, even knowing how they do play out, you still get a bit of a surprise when they do happen in front of you. So it's interesting.
Well, just as you're talking about the 50% retracement, 61.8, which you've got highlighted on screen, those blue numbers, if you were to enter one of those trades and it was a lower high and led into another bear market decline, looking back at the 2000, 2003, is it possible that it could be ferociously fast, that pullback, and not give much opportunity to scale into it?
Possibly there. I think this is one of the longest sort of bull markets ever. So I tend to think it will give you a bit more time. So, but I mean, this is a fast-moving market, no doubt about it. It's moving up and down very sharply. A lot of the commodities are moving up and down sharply. Just stocks in general are sort of having sharp moves up and sharp moves down. So yeah, don't, I guess, yeah, I think you're sort of, as I showed in the past, I think these sort of, even the Aussie market, which is more of a sideways orientated market, still going to be pretty sharp up and down here. So it makes it tricky. That's why I think maybe, rather than going all in or all out, is probably not the way to do it. It's probably just to start to, build a position slowly, sort of, try and, because if you're sort of not, if you, rather than trying to pick the high, pick the low, if you can average in over 3 or 4 days sort of near the high, or average in 3 or 4 days near the low, then that's probably a better method. But I wouldn't be trying to hang out too long, I guess, either.
Well, if we look at the S&P, you've said for some time that that's sort of running similar to the NASDAQ. The NASDAQ's just been more extreme. Is that following a similar retracement and giving you a similar sort of entry level or target for shorting the S&P 500?
Yeah, exactly. I know it's sort of only been a couple of weeks up here, but so it looks kind of impulsive here so far. But I just think, again, we're sort of, once these trends tip over, this is often how they play out. So just going, I think we've featured a chart of ANZ Bank here a few times in the last few months. Look how that topping process there, it's sort of, made a high. It's made like 3 or 4 lower highs. It's come back and right deep and then pulled back again to made a, almost to the high, and then it's pulled back deep again, almost to the high. So really choppy sort of, establishing a number of series of lower highs that are there. So you can get that type of setup here, but I just think I just think there's so many similarities here with that period. And if we look at what's happened in the past, that's our best guide. So I'm just viewing that. So the S&P has snapped back a bit further. So we'll probably overshoot the NASDAQ there. So maybe it'll go to 61.8, or maybe go a bit, maybe go 2/3 of the range, something like that. So I expect that one maybe to go a little bit deeper into the range. It has done in the past. So, but I still think it's sort of topping price action there.
Okay, and you've mentioned before the resilience of the Australian market. We've also, if we look back to 2000, 2003, at that time we were starting the commodity super cycle, and that helped buffer the Australian market. Could that similar thing happen and complement the value stocks that we have on the boards?
Yeah, could do, definitely. We've talked about the outperformance of the ASX200, certainly the case over the past few months, while obviously the US has been pretty weak, come back a lot deeper. We've held, we've been a lot shallower. We're bouncing back a lot stronger. We're not that far away from the old highs here, really. So it's funny, you've seen it in the past there, sort of as those other markets made lower highs, the Aussie actually went slight new highs. So that's a possibility. Maybe the ASX200 could make a slight new high there. I still favour maybe just making a lower high, but it could go, it might do something like an ANZ, it might go near the last lower high and then fail there. So maybe it'll set up a second lower high just under there. So, but definitely seeing some outperformance there. I think the volumes are starting to, I've noticed the volumes starting to drop off as well on some of those rallies. So they should be running out of puff here, which looks like the case, particularly the US as well. So should sort of go up on declining volume. There should be less commitment coming through. So starting to see those signs from what I'm seeing. So just typical sort of topping price action there. But I expect our market to show relative strength, which is already happening. So but I think you'll see some resistance here, probably just under that last lower high.
That's one point to look for. But you've mentioned relative strength, and that's a good segue to go into this week's trading shares. You've got a fair few gold stocks in there that you're mentioning, talking about relative strength. But before we delve into those, you've still got some big names here. Sol Pats and AGL, you've touched on both of those before. Sol Pats, what's happening now that's brought it back to your report?
Yeah, look, I thought the Sol Pats got really oversold there. So, apart from being a big correction there, coming back, 2/3 of the range, most of the stocks in their basket have held up pretty well. Obviously, like New Hope is flying. I think TPG's done pretty well. Brickworks is done okay as well. So a lot of stocks have actually yeah, it's a pretty robust basket of stocks they've got in there. Yeah, the column is pretty large. I think sort of remember sort of seeing near the low there that yeah, the NTA there sort of, I mean, basically what the basket of investments there individually was sort of, was worth more than the NTA of Sol Pat. So it's just looking a little bit oversold here. So no surprise to see a bit of a bounce here, but definitely come at a bit of a key level. Really well managed company longer term as well. So yeah, this is sort of one that I just thought was a no-brainer for portfolios, but it's had a nice little bounce here. First level is probably 28.70 is the old 50% of the range. So you might get some resistance there, but yeah, this is definitely a stock that can probably go up in the face of a weaker market as well. So yeah, I just think it looks pretty good here.
And another one that you've mentioned before, which is AGL. You've traded that successfully. Your timing was impeccable before, where it came well off the bottom and got some good trades there. What's happening now in that chart that's catching your eye?
Yeah, so we've still got that. A couple of things. Obviously, we had that false break at the low and the big descending wedge on the down. Big long serving downtrend, pretty nasty one. But yeah, obviously breaking out of that, reasonably positive there. Kind of a lot of volumes initially, which was maybe a little bit of concern. There was some big volumes at the low, which was sort of exhaustion type volume. So that's kind of positive there. But the two things I do like about this is that the two breathers here, was the stocks had obviously a bit of a run there to the mid sevens and then gone sideways there for 4 weeks, and then had another pop, then gone sideways for sort of 3 or 4 weeks as well. The pullbacks have been really sideways and they've been nice and tight as well. So yeah, if you're struggling to sort of go down, when you consolidate more of a sideways manner, that's pretty constructive there. So although the volumes weren't heavy last week, just the sideways consolidation is kind of positive, is constructive. So yes, I still think this looks pretty positive there. So that sort of I think 828 is the 2000 high, and then I think around that sort of 840, sort of just underneath that previous swing low as well. So I just think there's a good chance of sort of moving up towards that level there. You also got the potential corporate play as well. Obviously, someone's got a few low bids out there, but you just never know. Maybe there's another bid coming there as well. So, but yeah, price action's pretty robust. So I just that looks pretty strong. So I know it's an unloved, unfavourable stock here, but yeah, someone potentially wants this asset. So yeah, could go high.
So that's two of the big names. You've also got some favourite gold stocks in here. So when we move over to the gold stocks, you're talking about relative strength. So for those who aren't familiar with that term, what does that mean, relative strength?
Just obviously, if we look across the market there, these are the stocks that are sort of have had I guess a bit of a pop here recently. So we can look at relative strength in the short term, so the strongest stocks for the last week or two, or the strongest stocks for the quarter and things like that. But I just noticed across a few of those different scans that we do that the gold stocks are sort of coming up on an increasing number of those. So some for the quarter and some for the last week or two. And so just holding pretty firm here. But the other thing which I find is really interesting is like a lot of the laggards as well starting to break out of consolidation patterns. And then, so that's pretty constructive. And then the third thing I really like is the volumes are all elevated as well. So, similar to sort of maybe coal and oil and iron ore stocks and uranium stocks, is sort of when these things did initially take off, they all took off initially on some pretty strong trading volumes. So, as we talked about in the past, when you take off on low volume, that's usually when you don't follow through. But if you take off on big volume, that's when you can get extra moving. So yeah, as I was saying, the best thing we do, obviously they've all had a bit of a pop here, so it's a bit of a dangerous time to be jumping on board here. But if you get a consolidation, if they start to sort of trade sideways or consolidate in a sideways manner after having a good run, that's the type of price action I want to see. So yeah, I'm looking for a little bit of a consolidation here. I can see here like Golden Stars, the last couple of weeks it's gone sideways as well, pretty light volume. So after breaking out of that range, so that looks pretty constructive. Good volume on that sort of lower high, that little move up there. So that's pretty constructive. And then we're seeing just some of the mids and the smalls Like I think Santa Barbara there's broken out of that downtrend there now. Again, bigger volumes have sort of come in down the low as well. So got your false break, broken the downtrend, starting to see some strong up weeks on pretty good volume there. So if we can consolidate here, that's pretty positive as well. So I think Santa Barbara had a bit of a negative update on Monday. So maybe you just got to sit back and watch that one, see how it trades over here the next week or two. But what we're looking for is maybe some little consolidations here. I think even like Regis looks pretty positive to me. That's had elevated volumes for probably the last 4 or 5 months. So I know there's been a bit of corporate activity there, raising some equity and stuff there, but the volumes are still stayed elevated the whole period. And that downward trend that channel looks like it's broken out. Even breaking above the previous swing high as well. That's the thing that I like to see. Sort of once you start breaking above old highs, that's a pretty positive sign as well. So I think that looks pretty encouraging.
Just the final one in that gold group, you've got Resolute Mining RSG.
Yeah.
Still kind of in that downward channel, but just in the last couple of weeks, it started to crack above it. Is that the same sort of thing you're looking at?
Yeah, that's right. So normally I wouldn't go near something like this because it's kind of a smaller stock and that's more of a pretty corrective range there. But look at the volumes the last sort of 3 or 4 weeks as well. We're seeing just really elevated, seeing some decent volume coming in here. So it's a bit of a corrective channel as well through that whole period. So yeah, so a lot of stocks look like this in that sector. So I know some of them have already had a decent run, but yeah, I mean, I guess what I'm looking for now is some sort of consolidation from some of these stocks. Just want to see price sort of tighten up and get into a little sideways sort of shimmy sort of consolidation, and then we'll get a little VCP pattern or whatever it is, and then hopefully we get a pivot day, and then we can get on board. But yeah, as we've shown some in the past, they're looking at some of those iron ore stocks and lithium stocks and coal stocks. They can have a good run, then they can cool off for a while as well. So they'll go through a bit of a sideways move, but once they start to break out again, but I just like the early signs are pretty positive here for gold. There's definitely there's bigger volumes in there, which to me, looks like accumulation sort of style volume across the sector. So just sort of bodes well.
That's a good aspect to be looking at the market, especially if we're setting up bearish trades. It's good to have some stocks to work with. And,
you got to look. I think in this market, you got to have your stops and targets in place here. You got to have a reasonable risk reward sort of set up here. So don't fall into the mistake of that these things must go up because everything makes sense inflation wise and all that, but they should be going up. But so still have your stops in place here. But yeah, I think the signs look pretty positive there.
There's some good trades and some good parts of the market to look at, and no doubt we'll come back again next week for another update.
Thanks, Chris.
Thank you, Gary Glover from Novus Capital.
Cheers, mate. Thank you.